Okay, guys, welcome to everybody. Welcome. Very nice to see you all. This is our Monday webinar. Remember, on the Monday webinars, it's free for everybody. They're open. They're good for the public and so on. And during these webinars, what I like to talk about is just what's going on, what I think is going to be interesting for the week, what I think the big trades and the big moves for the week will be. So, that being the case, let's talk about what those are. And again, welcome to everybody. Remember, this is one of four that we do. We do Monday, Tuesday, Wednesday, Thursday every week at this same time. But only the Monday one is free and open to everybody. So if you'd like to get a little more involved, you can go to daytradersfx.com and get a free trial. Now, here's a little special I have. I ran I ran a special last week for the Festival of Traders, and I just wanted to extend that to all of you guys as well. So normally I give a 5-day free trial, and then it jumps right into your monthly payment after that. What I want to do for anybody in this webinar today that is not a member and would like to kind of give it a shot, give it a try, if you go to this link, which I'll post in just a moment, but daytradersfx.com/special, this is the Festival of Traders special, which means you get the first month for $27. So you can give so our normal live group fee is $79 a month. You can get the first 30 days for $27 to really give us a good try. 5 days, that's enough to see if you like the sound of my voice, and you probably won't, but 30 days will give you, enough time to really see what we look at, how we trade, everything that we do. So there's the link right there, daytradersfx.com/special. And that will give you a 30-day run in the group for $27 bills. So we'd love to have you guys. There you go. Any questions about that? Any questions, comments? Let me know. Let's get down to this money-making business. Let's get down to what's going on in the markets right now. Remember, for the coming week, we want to know what kind of news announcements we have. Last week was kind of a medium news announcement week. This week will not be a medium news announcement week. This is a big, busy, crazy week of news. You can see the economic calendar is pretty heavy, including today, in just about an hour and a half, we have the meeting minutes from the Bank of Australia. So that's going to be a semi-big deal, especially since we're going to talk about some Aussie pairs here shortly. And then going into Tuesday, we have some Euro, Canadian, plenty of U.S., CPI and building permits for the U.S., more Canadian stuff. Tuesday is going to be a big day. Oftentimes when we don't have any news in the morning, things can get really boring. And so right now we have a lot of, every morning has some amount of pretty important news. So Tuesday you can see is busy for Canada, the US, Europe, lots of good stuff there. Wednesday we have employment numbers for the UK, big deal. We're going to talk about some super exciting pound situations that are going on a couple of the pound pairs, and so we definitely want to see what is going to be the result of these news announcements. So employment numbers, voting on interest rates, and so on, that's all a big deal for the UK, and that's going to be happening this Wednesday. And then in the morning as well on Wednesday, we have the FOMC statement and press conference. That's going to be a huge mover for anything dollar related. So we're going to be keeping an eye on that. That'll be a big deal. Thursday, more U.S. news in the morning, and some Swiss franc and some Japanese bank holiday action. And then Friday, we'll finish everything off with some Canadian core CPI and retail sales numbers. So it's a pretty big week. There's not going to be any shortage of activity or news announcements or anything like that. Okay, let's go to the euro dollar, and let's just spend 1 minute on the euro dollar. I don't know what I think about the euro dollar. One thing that we have to keep an eye on is right now so many of these markets are trading like they're summer markets. Where things look like they're going to break out and then they don't. Things look like they're going to trend and then they don't. and it's very kind of summer-esque. This is the 4-hour chart on the euro dollar, but if we go over here, we can see at the last couple of months we get just a couple, 1 or 2 days of movement, lots of sideways stuff. 1 or 2 days of movement, lots of sideways. There's 2 days of movement, 2 days of so about once or twice a month on the euro dollar for the last nearly 6 months, we've had 1 or 2 days of movement, and then a week or 2 weeks of sideways consolidation, and it's been tough trading on the euro dollar. This is why I'm not doing too much with this pair. There is a nice rising wedge right here that I'm keeping an eye on, and it's coming into this pretty significant resistance area here. You can see that it looks like we're clearing this descending trend line right here. So this might really open things up for a huge movement to the upside. Remember, we've talked about this monthly chart, and we've talked about the fact that we have a nice bullish engulfing candle and a bit of a train track setup right here, and it looks like we're going to have a pretty okay time opening above all of this, which is going to be pretty bullish for the euro dollar. The thing that we have to keep in mind on the euro dollar is the fact that the ECB is probably not going to not say anything if the euro starts approaching 141, 141.50. So I would be pretty concerned if we start seeing those kinds of levels. I would be looking for probably a big reversal. Now, as far as market timing goes, as far as what do we typically see year after year, this is the exact time that we start to see some consolidation, and then big movements typically happen coming up pretty quick here. We're about halfway through March, and we have that big pre-summer movement. Some of you guys, most of you guys probably have not heard me talk about this. Those that are in the group have heard me talk about the pre-summer movement a lot. And that's that big move that we get sometimes in April, definitely in May, definitely in June, where markets move huge. They move huge big. And so with where the euro dollar is, it's at kind of uncomfortable high levels. The pre-summer movement, I mean, you can almost quote me on this, has to be down. Has to be down. The euro dollar has to be down, because these pre-summer movements can be good for anywhere from 500 or 600 pips to 1,000 pips. And so the euro dollar's at a high enough area right now. This is kind of my big long-term take, what I think is going to happen on the euro dollar. It's high enough right now that I could very well see the euro dollar go up just a little bit more, because there's a lot of retail shorts, and then have this thing reverse and head down into, potentially down into 130. Going into April, May, June, we could see this euro dollar sink to 130. And in fact, I'm pretty confident that that's what's going to happen. And then sometime in July, as has happened for so many summers, we'll buy whatever dip we see in July and ride it for a month or two and grab another 1,000 pips out of it. So we have two really huge trading opportunities on the euro dollar coming very shortly. But for the moment, I think it's a little risky to buy, and I think it's a little risky to sell, honestly. We need to see if this euro dollar is going to break a little bit higher, and then somewhere up above 140, barely above 140, like 141 will be time to start shorting this euro dollar and targeting, the very low 130s. And even lower than that. So that's what I'm looking for on euro dollar right now. I don't see any trading opportunities today, and maybe not even any for tomorrow, but possibly this week if we start breaking these highs, if we get above 140, then I'm going to be actively looking for opportunities to short the euro dollar. Okay, so, and that's all, you're going to hear me starting today, and for the next couple of weeks, you're going to hear me talk a lot about pre-summer movements. The pound dollar is a great candidate for a pre-summer movement as well. Remember, the pound dollar right now is sitting, this is a big major bull flag on the daily chart. And this is, here's our big flagpole right here. We have this consolidation, we have this pullback, and the pound just seems to be holding. It doesn't really want to get much below about 165, 165.50 or so. remember, we have a 50% fib and a daily pivot right all around 165.50 area, and the pound seems to be holding. So this is very much an intact bull flag on the daily chart. And so what I think we're going to see here, since this is such a textbook bull flag, is I think we're going to see a nice little move higher. We're going to see this thing break out, and we're probably going to see the pound dollar reach around 170 or just shy of 170. From there, I can't express the amount of shorts that I'm going to be putting on the pound dollar around 170. It's going to be severe. It's going to be, this is the trade I've been talking about for a while. It's going to be put shorts on and forget about them. I will risk losing my entire account going short at 170 on the pound dollar, because I think from 170 we're going to make a very realistic run from 170 down to potentially 160. So I think we have a 1,000 pip trade coming up on the pound dollar if we reach 170. We have all these missed weekly pivots and a 200 moving average that's well overspent. So if this thing can make a run, then we're going to be looking to short it against those higher areas. So remember, the pound dollar is pretty high as well. It's doing pretty good. We definitely don't want to be shorting it right now because we're sitting inside of a bullish flag. So inside of a bullish flag, what we want to be doing is one of two things. We want to be getting long against this low. Now this low right here, which is about 165.65, let's say that we're getting long against 165.50, and you can see that we're at about 166.40. So I bet we can get a nice little pullback so that we can tighten that stop up just a little bit, and I bet we'll have a nice opportunity to get long pound dollar around 166.00, about 40 pips below current market price. We'll get our stops down there about 50 pips. 50 to 60 pips, nothing too major, and we're going to target at least 168 to 169.00 from that from that long against 165.50. So we're looking to buy this thing around 166.00. We're looking to trade it up into 168.00, potentially 169.00. From that area, we are looking to short the ever-loving heck out of this thing down to 160. So that's what I'm looking for there. And Kieran, to answer your question, particular time of day to trade, these are long-term trades. So what we want to do is monitor the market, whenever you have time, but typically around this time is great. Also, depending on what time zone you're in as well. Also around the London and European Opens is good to just kind of peek at things for a few minutes, and around the US Open. So in about 12 or 13 hours is a good time to look at things as well. So this kind of trading, I think it's good to look at the charts at least twice a day for at least a half hour, maybe 45 minutes, kind of just get a good feel for things. Spend about an hour a day trading, maybe break it in half into 2 sessions. So is everybody clear on this? My move right now is to get long around 166.00 with stops around 165.50 and targeting that upper area. If we break this low, and particularly if we break 165.50, then this is not something we want to hold on to. This is not a get long and stay long no matter what. This is absolutely not that, because we have a pretty overbought daily chart. And so if that's the case, then if we start breaking these lows, then we're probably headed down into 163.50 and into 162.00. So it's not something you want to hang on much below 165.50. So that's important. This is not a hold on to your buy position at any cost. Now, at 170, that's a hold on to your sell position at any cost for sure. That one is just, hang in there because it's going to pay out huge. But right now, this is... We're trusting the chart pattern to get long pound dollar against that 165.50, but anything below that, we're probably making a big run down there. So we want to have 50 or 60 pip stop losses with 200 to 300 pip profit targets on this pound dollar long for now. Okay, so that's the pound dollar. The Aussie dollar, in my opinion, is a little bit of a wait and see. I just want to mention this real quick. Aussie dollar is an inverted head and shoulders pattern on the daily chart. That's all excellent. We're coming into contact with a 200 moving average, which is going to be a little bit of a situation. We've got 2 missed weekly pivots up here. That 200 moving average is probably going to get hit very soon, and that's worth keeping an eye on. And we're sitting right at the neckline. The neckline on the Aussie dollar is about 90.80, and we're right at it. We're right at that neckline. So above this, we'll probably make a nice run into the 200 moving average, which is just shy of 9,200. So that's an easy little, 100 pip trade. But I'm kind of sitting out the Aussie dollar for the moment. I need a little more clarity. You can see that the last couple of months in creating this head and shoulders pattern have been very choppy, which is okay. So month of December, kind of bottomed out, and then January, made a very nice head and shoulders pattern, but it's gotten a little bit choppy, and it's made a couple attempts at breaking that neckline and hasn't done it. So I'm going to be real careful with this one. But getting above about 9,100 could put some very strong bullish push into this Aussie dollar. So just keep that in mind, but I'm not trading anything on this one just yet. More of a focus. We probably will have an entry on the pound dollar in the next half hour to, or excuse me, in the next several hours to 24 hours. So that one's much closer by. A lot of people have asked me about yen pairs, and I'm just not seeing anything on the yen pairs that gets me too excited. I'm looking at the daily charts, and I see this kind of stuff right here, and I think, this is the pound yen, and again, it's kind of summer trading conditions. December, we had this big run in November, and then December ran up just a little bit more, and then January sideways, February sideways, and March has so far been pretty sideways as well. There's these nice little movements, and if you can get long and short against those daily extremes, you can get some nice little movements like these guys, but it's so much of this chop. So the thing that we have to be careful of is potentially for the next week or 2 or 3, anywhere in there, we're going to probably see a little more range trading. These are like summer conditions, and summer markets oftentimes can just bounce around. They can just consolidate and go sideways and not do a whole lot. They look like they're going to break, and then they don't. And so that's where we need to focus on buying the dips and selling the rallies. And that's why the pound dollar is such a great trade. This is a nice area to buy this dip. And we're going to trade it up into those highs of this bull flag into about 16800, but we're not 100% counting on that breakout to happen. We hope it'll happen. We think it can happen, but it's all about buying the dips, selling the rallies. So that's where we have to be careful on this Aussie dollar, because this is coming up to big resistance, and so far nothing has broken out too much over the last several weeks. It's been a lot of bouncing off these levels and so on. So this Aussie dollar right here, if this breaks this level, then we'll kind of come back and reassess tomorrow and the next day. But right now it looks like it just looks a little bit tricky. So that's why I'm sitting tight. And all these yen pairs, besides these little movements that they'll have from time to time, there's not that much great stuff. The euro yen and pound yen had great movements, like Thursday of last week, but then you look at the big picture and it's a lot of choppiness, and we want to be careful with that stuff. So that's why I'm kind of sitting tight on the yen pairs. I'm not doing much on the dollar CAD just yet either. Just a quick look at dollar CAD. We do have this nice little trend line, this nice little wedge forming right here. If we break this, our near-term target should be about 10800. 10800 on dollar CAD, and we will be watching this, but that's about all I have to say on this one for the moment. Look to target about 10800. We're sitting at about 11060, so there's a reasonable target there, but it's been quite choppy as well. So just be careful with that. My trades of major preference right now are pound dollar and euro Aussie. Pound dollar and euro Aussie. Because we have such amazing, fantastic shorter-term situation or longer-term situations that are really starting to finally pan out. The euro Aussie has been a choppy mess for weeks. It's been just a mess for weeks, for months even. But when we look at the bigger picture, we can see that the euro Aussie is a fantastic head and shoulders pattern. Fantastic. It's broken out of this rising wedge, and it's stayed out of the rising wedge, and this right shoulder is almost to the pip, almost the same level as that left shoulder, and it's having a good, it's staying below that pretty well. So we want to be a little bit careful. The neckline's down here around 150. We can probably get in a little bit sooner, probably below about, I had a trade posted to short the euro Aussie at 153. It got below 153 overnight. and you can see that we got all the way down to about 152.80, and then it pulled back a little bit, and it came back, and it's just kind of all over the place. So Euro Aussie, some may still be in it. I'm in it, and I think it's worth holding on to. If you're not, then the next run could be below about 152.70. That's going to start getting us out of this trend line and start running us into this 200 moving average that's so overextended, and these countless missed weekly pivots. We have 1, 2, 3, 4, 5 missed weekly pivots, which is almost unheard of. And a 200 moving average that's hugely overextended, and a perfect price pattern. So I think short Euro Aussie is kind of the landscape. That's what needs to be going on right now. So I'm loving that a ton. The pound Aussie is a little bit crazy, but it's also pretty fantastic looking. Great head and shoulders pattern. Likewise, 1, 2, 3, and even more missed weekly, daily, and monthly pivots down here. A 200 moving average that's pretty overextended as well. If we start breaking these lows, we got to be careful. This is going to be a strong trend line. We broke out of that rising wedge. We've stayed out of that. The right shoulder is pretty well formed. This is our neckline right here on this pound Aussie. So it's going to take some finesse getting into this thing for sure. It's going to take a little TLC, but somewhere below about probably below about 82.50 is where we're going to be looking to short the Euro Aussie. That's only about 75 pips away. That's not super far. This is a huge moving pair. So below about 82.50, we're going to look to get into this thing, or we're going to try to enter on some pullback against weekly highs. You can see last week's high was back here about 186.00, which is 275 pips away. So we're going to be looking for opportunities to short against that or to enter below 182.50. So I like the pound Aussie. It's a little bit of a question mark for the moment. My focus is more on getting long pound dollar against the lows and getting short Euro Aussie current market price or below some of those lows as well to really kind of play out that big head and shoulders pattern. And let's talk about yes. So a couple of questions. Michael's asking about the New Zealand dollar. I'm assuming you're talking New Zealand dollar here. New Zealand dollar has gotten a little tiny bit interesting here, but here's what we got to look at. We had this big breakout attempt, and there was huge price rejection there. Huge price rejection. This thing has run basically straight up in the last 2 months, and then big rejection right there, and it's making another stab at it. But this does not give me a lot of confidence about getting long here. You can see that we're approaching the highs of all of 2013, and we're getting beyond the highs of a lot of areas here. So I would be, if I had to do something on this New Zealand dollar, I would be short. I would be short if I had to do something. Like a gun to my head, must take a trade right now, I would get short New Zealand dollar. I'm not trading this pair, and I may not trade it at all. But it is it's coming into some very significant levels, and that's not something that I would want to buy into just yet. I'd be pretty careful about that. And Adrian, to answer your question, I have been looking at the dollar Swiss franc. It's just, if I think the euro dollar is probably going to push a little bit higher, then obviously by default I think the Swiss franc, the dollar Swiss franc is going to push a little bit lower. But now we have 2 weekly pivots up above that need to be touched, and we've got a fairly semi-overextended 200 moving average on the 4-hour chart. So all those things taken into account, they have to be taken into account, of course, and it looks like we're starting to work on a little bit of a falling wedge here on this daily chart on dollar Swiss franc. So I look at that and I say, yeah, this could totally continue lower, but if we start breaking some of these levels, then this thing could be making a reversal up into 88 and to 8,900 and so on. And then just a quick little look. I'm not in a trade on the CAD Swiss franc just yet, but I think there's a great opportunity to get long sooner than later. We still have this rise or this falling wedge. We have tons of upper targets. Everything's looking great there. and it's made a couple of stabs. We've made some bounces, and then it falls back. This is a nice little reversal pattern here, so I wouldn't want to get long against that just yet. But it looks like 78.50 is holding very well. 78.50 appears to be holding very well on this CAD Swiss franc. So I think that's only, that's only 50 pips away. So I think that on some dips here, I would feel pretty good about jumping into some longs. Let's get back down to 78. 75, 78.60, 78, right in that general area there. And let's start getting long against, this low is actually more like 78.40. Yeah, it's basically 78.40 right on the dot, and here we are at 78.97. So we're not far away at all. Let's see if we can get some pullbacks down into maybe 78.65 area and get long against this little spot, because it does look pretty good. It does look pretty good. Again, my focus is going to be on long pound dollar, short euro Aussie, but I'm keeping my eye on a couple of other pairs, namely the CAD Swiss franc and the pound Aussie, and some of those pairs. But I do like this. I definitely do like this CAD Swiss franc, and it's getting pretty interesting. That bottom seems to be holding pretty well. And this falling wedge looks like it might be ready for a big move and a big pullback. Again, we have at least 3 missed weekly pivots that we can see. Actually, it looks like I guess is that from this week? So 4 missed weekly pivots. So the weekly pivot from last week is also missed. So it's looking good. It's looking good. I think it might be time to get long CAD Swiss franc pretty soon. So that's what I'm looking at. Let me get this recording posted. Questions, comments, guys. What are some of the pairs you're looking at? What are some of the things you're trading? What are some of the questions you have? Let me know. Let me know. And remember, guys, one more time, I posted the link, daytradersfx.com/special. And that will get you $27 for a month of the live trading group. 1 month of the live trading group. So you can get that right there at that link I just barely posted. Because we're going to have lots of important updates coming this week from these setups that we're talking about. But the big focus, Euro Aussie, Pound Dollar, CAD Swiss franc. Questions, comments, guys? Send them on over.